Elon Musk. America is entering a horrifying financial crisis. Apart from causing millions of deaths, the COVID-19 pandemic had a grave effect on the state of the global economy. But as the world's economic outlook shows few signs of hope, business leaders, entrepreneurs, and notable investors are still expecting some sort of financial crisis and are concerned about our economic future. One of which is Elon Musk, the world's wealthiest individual and the founder of Tesla, PayPal, and other multi-billion-dollar corporations. Musk's recent predictions, along with most analysts, suggest that a recession might hit late 2022, early 2023. In addition, almost no analysts have provided a short timeline as Elon has. But before we dive into the detail of Musk's ominous forecast on the current state of the economy and where he sees our nation is heading, make sure to like, subscribe, and hit the notification bell to stay up to date on Finance Sense videos, covering all the latest trends in the financial markets and the economy. Without further ado, let's head on to the video proper. Elon Musk knows what it's like to go through an economic meltdown. As early as February 1999, he made almost $300 million from the sale of Zip2, the firm he co-founded with his brother. That was months leading up to the collapse of the dot-com industry, March 2000. While serving as CEO of Tesla and SpaceX, Elon was directly affected by the Great Recession of 2008. He now predicts we will face an identical crisis within the next couple of months. Technology writer for the Wall Street Journal, Christopher Mims, wrote on Twitter that there are currently 936 companies with a valuation of over $1 billion and asked the masses how we envision this changing in 5 years. Unicorns are private enterprises valued at over $1 billion, and a picture of each unicorn can be found in Mims' tweet. This compilation of unicorns features businesses from various industries, ranging up to hundreds of entries per category. Compared to September 2019, when there were just 150 unicorns, this is a significant change. This is a six-fold increase in just 2 years, which is impossible to maintain. After seeing this post, Elon replied, "If history is any guide, not many will make it past the next recession." When Elon was questioned about the next economic downturn, he responded that macroeconomic predictions are difficult. If he were to guess, it would fall between fall and winter of 2022, but not further than 2023. Several indicators point to a global economic downturn in 2022. All of us are well aware that retail prices are rising at alarmingly high rates. The primary driver of rising costs is the government spending, allowing the United States to print its way past the 2020 crisis. The tax burden paid by the typical American worker to sustain the federal government is depicted graphically below. Taxes have increased dramatically in recent years, reaching almost $22 per hour, which is a considerable burden for any working person. After hearing the numbers, Elon commented that the chart should not be taken lightly. Raising interest rates and decelerating monetary easing, the Fed buying bonds, are part of the Federal Reserve's aim to reduce the national budget deficit. Recently, the Fed said in a press release that interest rates would have to increase to 0.9% in 2022. An interest rate of 0.9% may not appear to be much, but it is a sizable change from the annualized rate of the previous quarter. In 2019, the Fed aimed to increase interest rates to 2.4%, but the market responded adversely and interest rates were lowered to 1.5% prior to the outbreak. A 0.9% rate hike will most likely have an adverse effect on the market since the financial sector has gotten dependent on interest rates capping at 0%. The Federal Reserve Board also intends to reduce its bond buying program in connection with its planned interest rate increases. They also announced that the Fed would begin cutting back on monthly bond purchasing by $30 billion beginning in the middle of January 2021. Fed Chair Jerome Powell estimated that the Fed will stop purchasing bonds entirely by the middle of March. According to Powell, the committee doubled the rate at which it is reducing the number of assets it buys. Starting in the middle of January, they will cut the rate at which they purchase Treasury securities and agency mortgage-backed securities by $20 billion and $10 billion, respectively, each month. If the economy generally develops as predicted, monthly decreases in the rate of net asset purchases will typically be acceptable. This would suggest that the Feds would stop adding to the stock of securities around the middle of March, which is a few weeks earlier than they had projected at the beginning of November. This seems like a good thing, as it might lead to a reduction in inflation. On the other hand, this is terrible news for the economy. Even though the economy has recovered strongly from the outbreak, it has done so thanks to government expenditure, which will soon come to an end. As Elon Musk predicted, when the Federal Reserve stops buying bonds in the spring of 2022, a recession could hit the economy hard. Elon may allude to a possible economic catastrophe far more severe than a recession. Since a recession is defined as 2 successive quarters of negative economic growth, it occurs frequently. Additionally, if GDP falls by 0.5% each quarter for 2 consecutive quarters, it would nevertheless be deemed a recession. By contrast, depression is defined as a decrease of over 10% in GDP within a single year. The Great Depression is the most well-known example of such a period. The U.S. economy shrank by 30% during this time. As is the case with every other global recession, prosperity came before the Great Depression. The 1920s, known as the Roaring Twenties, were one of the biggest times of inference, which naturally led to the Great Depression. Tim Urban, a writer, posed the question, "The year 2020 is already 20% over. When do you think we can get to the roaring part?" Musk responded and said, "Let's make the Roaring Twenties happen." Such a post shows Elon anticipates a return to the Roaring Twenties in the near future based on present expectations. Someone on Twitter suggested that you can get paid to snap photographs of NFTs on a particular website. The site pokes fun at NFTs by demonstrating how easily they can be captured rather than having them in a blockchain. It's possible that we're already living in the Roaring Twenties, only this time it's the 21st century. Meanwhile, the accumulation of retail inventories is another potential source of economic contraction. Fund manager Cathie Wood, who Elon Musk holds in high regard, has been warning of an economic downturn due to excess supply of inventories. Due to the inability of supply networks to fulfill customer demands, retail stocks have dropped dramatically from their pre-pandemic highs. In anticipation of this trend, firms have begun placing enormous inventory orders. According to Cathie, the volume of orders is too high and will result in huge stockpiles. Recent evidence suggests that her forecast may actually happen in the months ahead. Cathie said on Twitter that while imports increased by 4.7% and exports decreased by 2%, data released shows that retail inventories rose by more than 2% in November, the quickest rise since the 1990s. Additionally, actual consumption was stable, and the saving rate fell to 6.9%, which is lower than it was before COVID. The increases to which Cathie refers are monthly increases. If they were to be maintained for an entire year, they would amount to a yearly growth of 24% in inventory. As a result of the massive increases in stockpiles, the United States GDP grew by 0.3% in the third period, a figure representing an improvement in inventory levels alone. Gains in inventories over the next several months would undoubtedly weaken the economy, raising concerns that a recession may hit in the upcoming 3 to 6 weeks. Elon's forecast of a recession at that period is spot on. There are several strategies investors may use to protect their holdings in the event of a downturn. According to the top hedge fund manager Ray Dalio, investing in Chinese companies is a great way to reduce portfolio risk and reap enormous profits. Still, many people have doubts about Dalio's prognosis. The CEO of Social Capital, Chamath Palihapitiya, has achieved financial neutrality by buying shares of Microsoft and Google and selling short shares in Meta, Netflix, Apple, and Amazon. Finally, Kathy Wood is hedging against a stock market collapse by shorting classic corporations like General Motors. That's all for this video. If you enjoyed it, please like, subscribe, and hit the notification bell to stay up to date on our videos. And make sure to leave your thoughts on Elon Musk's insights about the possible economic storm and what you plan to do in case it happens. This is Finance Sense, helping you keep up with all the latest trends in the financial markets and the economy. Stay safe and keep learning. Until next time.